Morning, Steve here in Chicago with the morning grain comments. Well, overnight, we thought prices would start out lower because of the tit-for-tat tariff issues on Friday between the United States and China. China announced tariffs on U.S. Imported goods. It really doesn't make that big of a difference because they're not bringing anything in anyway. But the President of the United States was quick to respond and increase tariffs on their $525 billion that comes into the United States. We also had the pro-farmer data that came out, and pro-farmer said that the U.S. corn yield might be closer to 163 than USDA's 169, and beans at 46 versus the USDA's 48.5. Again, two things there. Number one, the market has to believe the numbers. And number two, the big thing that came out of the tour was that the crop's late. And so the 30-day outlook for the U.S. Midwest weather is cooler than normal temperatures, and we might have some rain across big parts of the Midwest. So that slows maturity down. And so we're just kind of wondering, will we get the crop that the USDA is saying, or do we have to wait until October to find out exactly what the final crop number is? And then overnight, while most of us were sleeping, President of the United States in France said that the President of China called him and the trade talks are back on. That rallied the stock market. It rallied the grains, it rallied the dollar, it rallied crude oil. The problem is we haven't really got any confirmation from China that they actually had a conversation and that the trade talks are back on. So here we are sitting at probably prices below where farmers would like to sell. Based on the USDA numbers, there's no reason for nearby beans to trade over $9, Chicago wheat over $5, and December corn over $4. So farmers maybe need to get ready for some kind of trade talk bounce to increase cash sales just below those price levels. And even look ahead to 2020 at equivalent prices in the carry to begin to sell 2020 crops. Because two things probably are going to happen. Number one is that global production outside the United States is going to grow in 2020. Now demand is going to also increase, but stocks will probably increase in 2020. So it doesn't leave a lot of upside potential unless, number one, a trade deal happens and China starts coming in and buying ag goods, or number two, we have an early freeze and we just don't have the crop that we're trading today. So kind of nibble at it on the way up and see what happens as far as how high is high. United States and Japan at the G7 also agreed on a trade deal, which probably will increase Japan's buying of ag goods. Number one thing is probably beef and pork, but they also might buy a little bit of ethanol. So that might help the grain markets and support us underneath. And again, 10-day forecast from Midwest is a little bit cooler than normal temperatures. There might be a glob of rain that falls across eastern Nebraska, Iowa, northern Illinois, and there could be rain around those areas. Could help late planted crops, but the main thing is right now the crops need to get mature before the normal 1st of August freezes across the Midwest. So we're up and we're watching tweets, we're watching the weather, and we'll see what the USDA has to say as we get closer to the September crop report. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.